All right, in this video, we are going to talk about mid-construction refinancing, what you need to know, what you need to look out for, and how to actually get it done. This applies to not only like new construction projects, but also mid-construction if you're doing a rehab. If you run out of money or the construction took longer than expected, so your lender is now not extending, to stay in good standing with everybody, you need to either have a note that's current by refinancing or extending that loan, and oftentimes it makes a lot more financial sense to just refinance because you're going to pay the same amount of money to extend that loan for a fraction of the time than you would say if you got another 12 or 18 months. So I do want to cover some issues that prevent this from being successful and just going from there. So one of the things we see, which is unfortunate, is contractor runs off with money. So in a lot of cases, you should not be fronting large advances to the contractor unless you have a reputation with them. Now, you can get the materials yourself, throw it on a credit card, and then you have possession of those. It shouldn't be depositing material money with a contractor and then hoping that the materials come back. This is not to say that contractors are untrustworthy or whatever the case is. This isn't to bash anybody. There are dishonest people out there, and they take advantage of investors, particularly new investors. So to prevent this, you buy the materials and you don't and you follow your scope of work. So if the kitchen's to be done first, you allot a portion of the budget to the kitchen. You don't just outlay a ton of money up front hoping that your budget's going to be fine, because in all likelihood you're still making monthly payments and you're still doing all this stuff. So what happens is if a contractor runs off with the money, or you mismanage, a better way to say is you mismanage the budget such that you've outlaid a lot of debt without any value to the property, that's going to inhibit a refinance because you are going to be over leveraged with the property value versus the debt if you outlay a bunch of that up front. So that's why lenders do draws, is so that the leverage on the home goes down over time instead of going up. So that's kind of the first thing, is ensuring your leverage isn't too high, and that's you can prevent that by budgeting correctly, so doing pieces of the house at a time that increase the value, and two, not outlaying a bunch of money up front, because the contractor went off with funds. You can't change the math, right? If the leverage on the property is too high, a lender's not going to be able to come in and pay off that note while keeping their leverage low and conservative. The second thing is, if you suspect there will be a challenge to getting it done within the time frame, or you start to run into issues, you want to focus your rehab efforts on high value items. You don't want to spend your first 20 grand or your first 30 grand cutting down trees and doing landscaping to outlay debt for that, because that's not going to add value to the home. A tree might cost you like 5 grand to cut down, but it's not going to add value to the house, whereas like getting the flooring done in the kitchen or getting the cabinets replaced or something like that would add value. So focus your initial rehab, get the value add done out at the outset. Start increasing value of the property right away. Don't focus on stuff that doesn't increase your value, because again, if you get stuck, you need to be able to pay off that debt, refinance that debt cleanly, and you're not going to be able to do that if you haven't added any value to the property. So that's the second thing. The third thing I would say that burns people is credit. A lot of people like to put their rehab expenses on their personal credit cards, and that's fine. Again, if you do it to an extent where you get over leveraged and your credit score drops from the time you closed till the time you plan to refinance, or you start missing payments, your credit score is going to drop and it's going to make it harder. So then you run into, okay, now this person has bad credit, they're stuck in a construction loan and need to refinance out. So those are all risk factors that go into that. So keep your personal credit clean and utilize business credit to outlay for the upfront cost for your rehab. Okay, so as far as what to expect, so if you keep all of these things in mind, the 3 things in mind, here's what you can expect. Roughly 75 to 80% of the as-is value funded at closing. Now that doesn't mean you're going to get that cash in your pocket, but it does mean that if your debt is less than that, you should expect some proceeds at closing, right? So assuming you kept all these 3 things in check, it should be clean. And we've done a ton of these. People building new homes where they need more money, or the timeline was off, or you get stuck in a rehab for longer than you expected, jurisdictions with permits, or even if you mismanaged it. That's okay too, as long as the leverage can be maintained low. So 75 to 80%. So you're going to do a refinance, you're going to do an appraisal, you're going to do an as-is and an ARV appraisal like you did on the front end. 75 to 80% of the as-is value funded at closing. That can be used to pay off the loan and then maybe even give you some back at closing. You're still going to be capped by 70 to 75% of the after repair value. So just like in your first loan, you'll have some rehab budget set aside that you can use for draws. Typically 12 to 18 month term. And then, the big thing here is the backstory on why you needed it in the first place. The story has to be good, right? If you tell a lender, hey, I just mismanaged it and I don't know what I'm doing, it's unlikely that a lender's going to take another chance on you to get themselves in that position. So the backstory is important. If you have all of these things in consideration, you should very easily be able to do a refinance on your mid-rehab or mid-construction project. We do a bunch of these. These things need to be locked in order for you to have maximum success. If you need terms, go to privatemoneyquote.com. There's probably a link down below too. See you in the next one.